The economy may look steady at first glance, but everyday Americans are telling a very different story. Consumer confidence has dropped sharply and the shift is very evident. And while official data still points to growth, the mood across the country suggests that households are becoming more cautious about what comes next. In January, the Consumer Confidence Index fell 9.7 points to 84.5. This is the lowest level in 12 years. And even more striking, confidence is now lower than it was during the darkest months of the COVID-19 pandemic. Now, according to Dana M. Peterson, chief economist for the Conference Board, confidence collapsed in January as consumer concerns about both the present situation and expectations for the future deepened. And she also noted that 5 components of the index deteriorated all at once. Now, the expectations index, which is one of those components, it fell to 65.1. 80 is often viewed as a potential recession warning. So short-term expectations for income, business conditions, and job availability all decline. More Americans now believe a recession is either very likely or already underway. And one reason Americans are so uneasy is the growing disconnect between headline numbers and everyday experience. The unemployment rate remains at 4.4%, and yet anxiety is higher than it was in 2020 when joblessness reached 14.7%. Some economists have described this as a crisis of confidence that defies traditional economic policy numbers. Now, part of the concern comes from the job market itself. Growth has cooled noticeably. The U.S. added 584,000 jobs in 2025 compared to more than 2 million the year before. Heather Long, chief economist at Navy Federal Credit Union, called it the weakest year for jobs growth outside of a recession since 2003. And hiring trends reinforce that message. Private companies added just 22,000 jobs in January. ADP chief economist Neela Richardson said hiring is softening. It continues a pattern that we've noticed over the past 3 years. And she added that employers are very reticent to hire in the current economy. When workers feel less secure, confidence obviously can fade quickly. Now, several factors are shaping this downbeat outlook. Inflation remains top of mind for many households, especially when it comes to essentials like groceries and gas. And even when inflation moderates, lingering high prices can still strain monthly budgets. And consumers have pointed to concerns about tariffs, trade tensions, politics, jobs, and health insurance. Add in growing anxiety about automation and AI, and it becomes easier to understand why many people feel uncertain about the future. You see, across the country, consumers are becoming more selective about major financial commitments. Many households appear to be adopting a wait-and-see approach. They're delaying big decisions until the outlook becomes clearer. And as a result, plans to purchase homes, cars, large appliances, that's all declining. And there's another important trend worth watching. The top 20% of households now account for about 60% of consumer spending. Now, in an economy where that is roughly 70% driven by consumer spending, that kind of concentration can be very perilous. You see, if a relatively small group is hit by a financial shock, such as a bursting stock market bubble, the effects could be devastating to the broader economy as a whole. Traditional metrics like GDP and unemployment are very important, but they often look backwards. Consumer sentiment tends to look forward. And when confidence weakens across the country, it can signal that people are preparing for a more challenging environment. And some analysts have described the current moment as an invisible recession, where the data may appear stable, the financial stress felt by households is obviously growing. Periods like this can prompt investors to focus less on short-term market movements and more on long-term stability. Many look for ways to protect purchasing power and build resilience into their financial strategy. Now, physical gold has historically played that role because it's a tangible asset that does not depend on corporate earnings or hiring trends. Gold has long been viewed as a way to help balance portfolios during uncertain times. Consumer confidence is obviously declining, and many would argue for good reason. After all, economic tremors are often felt on Main Street long before they're fully recognized on Wall Street. And when households grow cautious, it serves as a reminder that preparing for potential downturns is not just prudent, but essential. And so if you're concerned about what you're seeing in the economy and the markets, and you're looking for a way to hedge your portfolios, I'm Mackay Block with American Hartford Gold. Give us a call today, and we'll discuss how adding physical precious metals into your retirement account or your cash portfolio can give you the hedge that you need.
Discover how gold can help you protect yourself and your family. Call today or visit our website for more information at AmericanHartfordGold.com.